Good morning, everyone, and welcome to the Vector Traders Consortium. This is Jeff Killian. The time is now 10:07 a.m. on July 18th, 2016. Prices have traded up through the 2157 level, which is now found as support. Now, in this case, the retracement is complete right back to the original resistance area that has now become, again, support. The preferred entry was a tick above that level. If the 2157 level can be held based on the current price action and the indicators combined, then there is a possibility that we're looking at a long move here. If not, this will be nothing more than a very small profit here where prices have turned around and will trade back down to possibly 2155. The downside volume that has come in here since about this point here, where close to 3,700 contracts were traded short, was fairly matched on the up and the downside. But here, as you can see, you have a volume spike that came in to drive the prices through and to the upside. Now at this point, since that happened, we have substantial downside volume that outweighs the upside, and this is why the prices have traded back down. We are trading ES near contract month. That is the S&P 500 Emini futures market near contract month 9/2016, and you are viewing a 1-minute chart. Now there is a possibility for this move to still go to the upside, but it's going to take substantial confirmed buy volume, as in these numbers or much higher, in order for that to happen. These prices will not trade up unless that volume comes in. And so we have to wait and see what the outcome of the largest institutions' stamped out volume will be. Right now, level 2 orders, the standout is 1129 on the upside at 2158, and level 2 standout on the downside is 1104 at 2156 and 50. I like the upside move. As I was looking at this earlier, these bars are fairly well interlocked on the way down, which when prices trade back up, as they broke out here, there's very little upside resistance until you get to 2159 and 25. The downside move that happened here, this shakeout, was met by a higher degree of downside resistance because of the levels that were mapped out all the way back here, at this double bottom here, and then again down here. So those levels respectively were 2154.50, 2153.50, and 2152.25. Overnight session opens, gaps up, moves up, sideways. The channel was established here, broke out to the downside, and now the upside. Some volume has come in since we referenced the past just a minute ago here for 800 and some change. Prices are still stable, now marked to the market 2157 and 50. Again, trading ES near contract month, the S&P E-mini futures 9/2016. Okay, now based on the possibilities that prices are going to keep moving to the upside, traded 10 contracts long this morning. And we will see what the outcome of this will bring us. The 15-minute indicators, according to our stable, are clear to be long. 5-minute indicators, according to our stable, are clear to be long. Price profit targets 2159 and 25. 2,500, 3,000 or more would push the prices at least another half, if not 3/4 of a point higher than where they are trading right now, marked to the market at 21.57 and 75. Mark to the market prices are trading at 21.58. Time is 10:15 a.m., July 18th, 2016. Enough time has gone by since the dominant sell side volume showed up at 9:43 and 15 seconds. Small accumulation here got us up, and now fairly well evenly matched between this point here and now. This volume should be coming in soon to make the statement. We'll be looking at above 2,000 contracts to stamp out the direction. And if it's not a single spike, then it will be accumulated volume. Price is now trading at 21.58.25. Here's the current setup on the 5-minute stochastics momentum index here, still clear to be long. MACD still clear to be long. Plenty of room to go to the upside here, from here where we are now to here, and here to here, before we get to the upper region. MACD still below zero level, out of the lower region, but still below zero. Plenty of room to go to the upside. SMI is getting closer to the upper middle area, with a lot of room to go to the upside to get to the upper region at the 80 level. Clear to be long. And prices trading up now. Your increased volume here has pushed the prices It's always the volume, the aftermath of the volume. The directional intent of the volume is always revealed by the money flow indicators. In this case here in the 5-minute chart again, we're looking at two money flow indicators, short-term and long-term, clear to be long. Price have reached one tick away from 21.59. $21.59.25 correction for that target. (10:20 a.m. July 18th, 2016). (15-minute charts and the 5-minute charts, according to what we're looking at here this morning, remain clear to stay long. You have the standout order at 1180 for 1184 contracts at 2160 on level 2. That level 2 order at 2160 is an exact match for this secondary target right here. (10:23 a.m. 7/18/2016). I suspect that substantial volume will come in at any moment now to get up to and through 2159.25 to get to 2160. Price has reached the 21.59.75 level on the target here. As anticipated, here's your long contracts that were traded in order to make that happen. And now the target, one tick away from 2160, has just been hit. Hold time a little longer than normal this morning. Slow moving market, really no choice. If you believe that your analysis is correct, these occasions will happen. And with what we teach here in this transparent manner, you'll have the confidence in order to continue to hold that position even in the slower moving market, because of knowing where you stand at any moment within the trade. Price is trading 21.59 flat now. (10:29 a.m. on 7/18/2016). If prices can hold a 21.59.25 target level, additional volume comes in on accumulation side, prices will get back up to 21.60 and possibly even 21.60.50. And there we go again. And back up. Standout order just above the market level 2 for 1,535 contracts at 21.60. That comes in for a confirmed buy. Prices should get up to 21.60 and 50. Real close, now 13.27. That's 1,300, now 50 contracts at 21.60. Here you go. Excellent. And the sell right in at 9.43 for 9.43 right after that. Here you go. Good. 1442, 60, 1900 traded long. That should push things up to 21, 60, and 50. Unless something comes in on the downside, that should work out. Okay, due to a time constraint and now the breakthrough, I'm going to get out of that trade. That's it. What an excellent demonstration of how to trade this market in real time. What an incredible trade this morning. We knew that the downside was a shakeout here, and in the shakeout here, we caught when prices traded back up off of 21.57 here, waiting for that volume to come in. The trade this morning had an extended hold time, longer than usual. But what I want to talk about here in conclusion and summary is that when you know you're right, and you know that you've mitigated the downside risk, or the short or long, in this case, long this morning, there is no question that the hold time, although increased, you can stay in the trade, which is exactly what proved out here. So for this morning here, let's take a look at the in and the out. And here you have it, 21.58 for the in, filled. 10 contracts out, 21.60.75. Okay. Here's your times in at 10, 11, and 53, and out at 10:33 and 36. We caught this trade exactly right this morning. And for the performance, here we are, $1,375. That's $1,375 on a single long trade this morning. Boy, what an incredible showing of what's possible. So there we have it for this morning. The time is now 10:35 a.m. on July 18th, 2016. Jeff Killian and Mark Sicilla for the Vector Traders Consortium on a highly profitable long call based on our methodology, what we teach here at vtctraders.com.